All right, guys, this is a follow-up to the late filing video that we just did. So a lot of people are afraid to address late filing and kicking that can down the road. But let's actually break this down and analyze it so you understand how to be in control of the situation. If you have filed late, you may want to stay on top of it because interest and penalties will accrue on your outstanding liabilities. Now, penalties can be upwards of 25% of the outstanding tax liability, meaning whatever you have left to pay. So if you had a $50,000 tax bill and you had $10,000 left to pay, the IRS can potentially assess a $2,500 tax penalty. On top of that, interest will accrue not just on the $10,000 of tax, but also on the $2,500 penalty. So you're going to be paying interest on $12,500. Now, many people may be afraid of that. There is some recourse here to get rid of the penalties. For example, if there is reasonable cause. So if something happened to prevent you from filing or paying on time, you were in the hospital, a close relative passed away, you were treating or helping a close relative go through a medical condition, there was a natural disaster. I'm sure you hear that when there are federally declared natural disasters, most of the time, the due dates are actually extended. This is part of the reasonable cause statute and the similar concept that the IRS and most state tax jurisdictions will offer to taxpayers. There are other things that we can take into account, like your filing history. If you were compliant, one error isn't the end of the world, and the IRS is actually reasonable. That's right, I said it. They are reasonable at times too, and they may forgive it. So don't be afraid of late filing because you want to get ahead of it before a notice comes. Stay tuned to the next video where I'm going to talk about how to handle those notices.